Core Scientific shareholders vote no deal on the proposed CoreWeave acquisition this week. An expected but nonetheless groundbreaking development for what was gearing up to be the biggest data center M&A of the year, at least for Bitcoin miners. You're listening to the Mining Pod, brought to you by CleanSpark, and in this week's news roundup, we break down the Core Scientific vote that went no for the CoreWeave deal. We also talk about CleanSpark's latest acquisition for a site in Texas with a nearly 300 megawatt power pipeline for its AI aspirations. We look at TeraWulf's latest deal with FluidStack, a 25-year deal, the longest duration that I know of for one of these AI acquisition, or for one of these AI deals for a Bitcoin miner. And for this week's Cry Corner, we have a look at a proposed soft fork for Bitcoin, which I don't think anyone's going to support. And we also have Ethan Vera from Luxor on today to talk about the ASIC market. So stay tuned. This is a great one. We start with the ASIC market, and then we hop right into the hottest news, the Core Scientific deal falling through. So stay tuned for that one. Y'all are listening to the Mining Pod. Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call FBox, the leading digital infrastructure company with all-encompassing cooling solutions. FBox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how FBox can help you optimize your digital infrastructure today. What's up, y'all? Welcome back to the Mining Pod. We've got Ethan Vera, COO of Luxor, on today. Will Foxley, founder of Blockspace, and your boy Colin Harper, editor-in-chief of Blockspace. We've got a packed lineup today. Big news this week, maybe the biggest news of the quarter. The CoreWeave Core Sci deal falls through after a shareholder vote. We've got an update on CleanSpark's AI aspirations and TeraWulf's as well. As always, AI is at the top of the docket for the news. And we've also got an update on the ASIC market from Ethan Vera. And as always, we will be going over Hashrate index data. So we will hop right into it with our Hashrate index update. The difficulty weatherman, Matt Kimmel, is out this week, so you will have to do with the backup.
Who's the backup?
All right.
Me or you or Ethan?
I guess me.
Okay.
Yeah. Well, I'll be the backup, and Ethan will actually come with the real sauce because he lives and breathes this
Ethan
every day.
Ethan could be first string.
Ethan could be first string.
I like coming off the bench.
Well, you know, I mean, it's kind of the same thing week in and week out. It's just depressing. Hashprice is getting crushed. It's at $73 per petahash per day. It looks like we just had an upwards adjustment of 6.3%. I mean, we just keep seeing these mammoth adjustments as we come out of the summer months and miners rev up and some of these new gen machines come online. And it's too early to say what the next one will be because we're only 8% in the current epoch. It's saying negative right now. We'll see what hash rate ends up doing. And per usual, fees are just nowhere to be found. I mean, there's not really anything going on in terms of the ordinals landscape or anything for alternative block space. And so right now, fees are just still pretty firmly in the dust. And for hash rate, we're at about 1.12 zettahash on the 7 days. So I don't know, Ethan, anything you can add here for secondary color for what y'all are seeing?
Yeah, well, we talked about the impact of block times and mining luck when we did it live in Nabs together. And I think this actually came to fruition. So we'll count that as like directionally right. I think with the latest difficulty adjustment, I think it was largely, the block times in the past epochs were particularly slow, I think mostly due to luck. And so that's being reflected in the last adjustment upwards. When we look at hash rate growth, though, it is curious because every news cycle that we're going to talk about today is miners stopping purchasing new machines and going to AI. So where is this hash rate coming from? Why are we already at, above 1.1 zettahash and we're not even at the end of the year yet? And I think really the story here is like China and Russia. And it's an area in which probably a lot of people in our networks and our circles aren't that familiar with, but clearly is the large growth area that continues to plug in machines and hash rate.
Yeah, we have a report coming up on Russia and Bitcoin mining that you actually helped with a little bit during the summer. And we got to get that one out fast because if there is a lot of hash rate coming in from that jurisdiction, it's going to become obsolete pretty quickly. But then there is a tight relationship between China and Russia in terms of exporting units across the border there, right? Not too far. And then typically you're pushing them a little bit more westward. If you're in China, think going west that way, as opposed to if you're in Europe and you're going east. But you're thinking about like the energy dense regions of Russia, typically in like that Ural Caucasus area or over to like just north of the border of Kazakhstan. So I suppose that's what you're kind of talking about there. And then in terms of Chinese hash rate coming online, you guys did a nice update with your snapshot at Luxor the other day and kind of showed like there's been an increase. Can you tell us a little bit about like how you guys get to that information for Chinese hash rate? And then also maybe anecdotally what you guys are seeing with like your trading desk or maybe just from like kind of words going around the street with how Chinese hash rate might be growing?
For those who are following on video, we have Luxor's hash rate heat map here updated for Q4. Russia comes in at 15.5% of the network, China at 14%. So just neck and neck there. And US is still dominant at 37.75.
And I think directionally, that's their market share is going to continue to grow. So we'll see what happens at the end of this quarter for the next update. But really in the United States, like there's only a few companies left like Marathon and CleanSpark that are really pushing for deployments of hash rate domestically. There are some pubcos that are expanding internationally, like Hive's deployments in Paraguay, for example, continued on. But really, it doesn't account for how did we just add like another 100 XL hash to the network, in the blink of an eye. And so largely, we do think that's coming out of China and Russia. And so expect those market shares to continue. I guess, Will, to your point there, which we had discussed a couple of weeks ago, our data from China is definitely not correct. Let me start by saying that. It's hopefully directionally accurate, but it is based off of our understanding of ASIC flows, of firmware adoption, of mining pool flows. So we're using some data that we have in-house as well as some of our partners do, but it's certainly not 100% accurate. Really, there is no way to get the exact number.
The thing that I'm mostly interested in knowing about, I think we'll just have to look out for some of the earnings updates, is like where's Kango deploying its hash rate, that proxy for Bitmain, and then seeing more of Canaan's deployments. Surprisingly, a lot of Canaan's revenue is actually coming from like their home mining aspect, which is kind of shocking to a lot of people. I've been bringing that up in conversation here and there. Like they had kind of a breakout product with that home miner. But then they also just put out a new release for a new unit this week, which we'll get to later in the show. Colin?
I actually think that we might as well just segue into the ASIC segment now, because I think Ethan raises some good points about where is the hash rate flowing currently. My first question, Ethan, we can get to the A16 as well, is it basically the idea that the ASIC manufacturers are picking up for the slack in Russia and China now that there are no buyers in the US, they're looking for anywhere they can deploy?
That's a leading thesis for sure. I think both for Luxor and other industry participants too, is that the manufacturers have been quite aggressive in terms of tape outs and development. Some of that might be competitive driven. For example, Bitmain might be looking to put the squeeze on new manufacturers like Bitdeer and Auradine and Proto, and really kind of just continuing to press forward in terms of new hash rate growth. That's our leading thesis. And of course, on the result of high amount of supply with kind of lagging demand from the US pubcos, which has been one of their big buyer segment, that leaves a void. And how do they fill that void? Well, they go and find mining farms located around the world, plug in their machines and start monetizing their manufacturing runs to the best of their ability. Their primary business is selling machines, so that is kind of like a band-aid for them. But we've seen that with Kango and others, that they have this ability to deploy their own machines into the field, start earning revenue, and then have a way to sell them as hosted contracts later down the road.
Yeah, it's interesting. Kango theoretically would be able to tap into probably any hosted site that Bitmain has. They would find a way to just structure a deal, right, to swap those assets around. Going back to the Canaan topic, and specifically their A16 with this, they just released. One way to think about this, Ethan, and I'll pull this up right here, at least the way that I'm thinking about it, is like, it seems like, it's a buyer's market right now in the ASIC market landscape. And I wonder how much of this is contributing to kind of Canaan's resurgence as a serious competitor. In terms of, I've heard a lot of miners over the last year say they've been really happy with their machines, and they're also just getting more attention. They're getting more bulk orders than we've seen them get in the past. And I'm wondering how much of that has to do with the fact that it's just a more competitive market. And so they now have the ability actually to catch the eye of some of the miners because Bitmain and MicroBT they can't just slack around now and hoover up orders. Does that make sense?
I hadn't thought of that angle before, where the industry headwinds that are facing the manufacturers, largely like lack of demand, is causing Canaan to be popular amongst miners. But I mean, I think parts of your thesis definitely resonate. Canaan has really built out a niche on two fronts. One, they have prioritized customer support, and they are basically willing to go around, meet with your team, meet with executives, be very hands-on during RMA and everything else, and treat their customers really like VIPs, whereas some of the other manufacturers are notoriously bad at after-sales support. And so Canaan is definitely, in the circles that we hang out with, is really number one on that front right now. The second is really just their development of machines. People forget that Avalon was the first ASIC manufacturer to really come to market. They've been around now for over 12 years producing ASICs in this industry. So they've had certainly cycles in which their machines are more popular and less, and could compete with Bitmain versus, we're way behind. Now we're in part of the cycle where Avalon is competing head on. So for example, like the A16 XP that you have pulled up here is a 12.8 joules per terahash machine. That's in air cooled, right? So that's compared to the S23 of, roughly 11 joules per terahash. So it's within the same ballpark, and it's really kind of considered a top line machine. Avalon will be able to squeeze out additional efficiency through two things. One, hydro cooling. Obviously, we've seen that direct chip cooling is a great way to improve efficiency. And second is just optimization of firmware. Their firmware still isn't fully tuned correctly. So I think there's going to be a future in which these Avalon machines are basically head-to-head efficient with the S23s.
Yeah, something to keep an eye on for sure. All right, let's move on to Core Scientific. Perhaps, like I said, the biggest news of the quarter. We're only a month into the quarter, but still, this has been what people have been waiting for bated breath for a while. And Will just reported on this morning for us. So, Will, I'm going to let you take this one away. The headline is Core Scientific's merger with CoreWeave fails as shareholders balk at price.
Yeah, I got to use one of my favorite words, bulk. So that's kind of fun to throw in there. But the big news this morning that the merger between CoreWeave and Core Scientific failed. This was somewhat expected if you were in the weeds. Probably stronger. I could probably go stronger with it. It was basically expected. This was not necessarily a deal a lot of investors in Core Scientific were thrilled about. Of note was that there was no collar on the acquisition. So if the price of CoreWeave continued to just humble, or maybe the economics of AI HPC deals got stronger, then this deal made less and less sense. The deal was first struck in June for around $9 billion in cash. It came basically to it was an all stock deal with no collar again. And so all the Core Scientific shareholders would get a fraction of a CoreWeave stock. That wasn't too attractive as the months went on. And there was a lot of the investor base in Core Scientific were voting against this. And then interestingly, Situational Awareness, a hedge fund, actually purchased almost 10% of Core Scientific in the weeks leading up to this deal, seemingly anticipating that the deal would not go through. And then they'd be able to buy up shares of Core Scientific, one of the new AI factories that transformed from a Bitcoin miner on the cheap. And so now they have 9% plus of Core Scientific, which has the ability now to go out and find new deals. We got more news this morning after the vote failed. News came out through a press release. We jumped on and listened to Adam Sullivan and the rest of the Core Scientific team talk about their future plans for Core Scientific now that it will not be a part of CoreWeave. They announced not only new financing options, $4 billion was floated around a few different times, but also that they have a second possible tenant expected to be announced pretty soon here before their quarterly earnings are announced, which would be a boon for them, right? Because a lot of these deals are contingent on finding the perfect customer, right? And every businessman knows that after you do one deal, you got to do a second, you got to diversify your customer base to protect your downside. And if CoreWeave or Core Scientific rather can come in with a second customer, maybe an Oracle, Microsoft, et cetera, that could really help out their economics of their company and start to kind of get them into that flywheel mode, right? Where you can start looking for cheaper debt to be able to scale your business because you have a better profile for your company. Might even be a better acquisition target again. though at this point, it doesn't look like Core Scientific is really looking for more of an acquisition. They just went through 6 months process with that, which was probably a little tiring. Ethan, I'll throw this one to you for any takes. Certainly a big news story for Core Scientific. I will note CoreSci price is up. Share price is up 5% on the news.
Yeah, I think it's one of the more interesting stories I've read recently, but not entirely surprising, as you said. The run up of the AI HPC miners have really led to this result. So if it wasn't for Aaron trading north of 15 billion and the rest of the HPC players really trading up, I think this would have been a really good deal. But given market conditions, there's a lot of value here, and I think a majority of Core Scientific investors obviously saw that path forward. Now, what I would say, I think this is probably not going to be the last of M&A discussions, both for this name and others. I think there's a lot of potential buyers here for these assets. So I expect, we'll still be talking about Core Scientific very shortly here in terms of, capital markets and other, strategic, plays soon enough.
Yeah, and they teased a lot, per Will's point, before their quarterly financials. They expect to announce a new customer, a new power contract at one of their existing sites, a new power contract at a new sites, and a new financing agreement. And to your point, Ethan, too, about where the market is, Adam kind of addressed that up front in the call. He said, we thought this was a good deal going into it. And then the market continued to show that there was insane demand for these data centers, and the valuations popped up accordingly. And to continue that, if you're looking at Iron, a company that has 2 megawatts roughly online of AI compute, they did at the end of Q2, and no tenant for a PowerShell, and they're at $15 billion. There's no way that Core Scientific investors were going to be cool with a $9 billion all stock deal. So I think, like Will was saying, this seemed to have been inevitable, but to what you're saying as well, Ethan, at the time that this was struck, this seemed like a decent deal. Nothing was running yet, and now we're just in a completely different environment. And to kind of speak to that, one of the things that was really nice about this after this call after the vote is this is the first time we've had the management team really speak openly about some of their forward-looking plans since the acquisition went into place, and just to speak to the potential that investors see in Core Scientific's portfolio. They currently have 590 megawatts in development for the CoreWeave deal that they consider billable power. 120 megawatts of that is online currently, and they have a 1.5 gigawatt pipeline of existing and future billable power. And they make a distinction here between gross capacity in terms of what they've been able to actually accumulate in terms of power contracts versus billable capacity for contracts with customers like CoreWeave. I think this distinction is really important going forward as investors continue to evaluate some of these miners who are making these big portfolio promises. But that's a huge pipeline, and it'll be interesting to see what they announce before Q4. And just a few more housekeeping items on this that investors might be curious about. There is no termination payment because shareholders voted no. Adam addressed that on the call with one of the analysts.
The analysts never look at the notes before the calls, I swear.
It's kind of crazy.
Just log in, and then they're like,
you could tell Adam. Yeah, you could tell Adam was a little bit miffed because he asked 2 questions that were already addressed in the pre-call.
I love it.
So I don't envy the CEO positions here. And they're targeting 3.3 gigawatts gross capacity in the near future. So in terms of that forward-looking guidance, there's a lot of running room here for Core Scientific.
I'll add one more thing before tossing to Ethan for final thoughts. They made very clear in the call that Bitcoin mining is done and that every single megawatt of Core Scientific's portfolio will be used for high-density compute. They currently have an agreement with Jack Dorsey's block to continue running and operating some units for them. So I'm interested to see how that kind of pans out. Like, they sign more deals and they just maybe figure out a way to classify this as high density compute, and they don't really call it digital asset mining anymore. Or I don't know. Maybe they just sell it off. I forget the exahash count they're supposed to have with block.
15.
Yes, 15 exahash. So the amount I saw, and I don't think we've had numbers since July, really good numbers from Core Scientific. So hopefully get that in the quarterly coming up. But the amount I saw at their proto announcement was like not that, like certainly not 1 exahash, but like not a ton of units. So I'm wondering if they're going to deploy the rest of that, or if Block is going to have to go find another tenant for those exahash and what's going to happen with that deal. But that's only a Bitcoin mining related thing, I think, there. And maybe in the future, we don't talk about CORZ Scientific anymore, even though we love them. Ethan?
Yeah, I think compute demand is going to be cyclical. There's no doubt about that. There might be periods in which VC funding for these AI companies is drying up and cycling, but I think that the trend is clear. Today, there's around 800 million users of ChatGPT. In the foreseeable future, that's going to be a few billion. Beyond that, I think there's going to be a world in which almost everyone has personalized AI that's working for them. That's going to be 7 billion plus GPUs, whatever we're on then, B700 or whatever the term from NVIDIA will be. And so there's just going to be an insane amount of compute demand moving forward, regardless of how this shakes out. And so I think investors saw that with CORZ Scientific. They're uniquely placed in their power contracts and uniquely placed to capitalize on what is probably going to be the biggest industry of our lifetime. And so the results today, I think, make sense if you look at it from that lens.
And the Bitcoin mining, retiring their Bitcoin mining, they mentioned it'll take place over the next 3 years. It's really interesting, I think, from an investor perspective, to think that they can monetize those megawatts until the 11th hour if they really want to. The biggest loss here, I think, is obviously for Proto, that they were, I'm imagining, hopefully betting on someone like CORZ Scientific being an anchor customer for this ASIC miner line. So hopefully they can, shift their focus, find another big buyer for those.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at CleanSpark.com.
We'll go ahead and move on to some more AI and HPC news. As I said, it just seems to dominate every single docket that we do these days. And that is CleanSpark snapping up a Texas site and a 285 megawatt PPA to launch an AI data center in the greater Houston area. So this news came out earlier this week that CleanSpark has acquired rights to approximately 271 acres in Austin County, Texas, and has signed long-term power purchasing agreements totaling 285 megawatts. So this would boost the company's total power capacity by 28%. And CleanSpark, in the press release, made a big to-do about this being specifically suited for AI compute. It's close to a major metropolitan area. It's also close to natural gas hookup in case they need that, and fiber optic backbone as well. And the natural gas thing is, I think, an important thing to highlight here, because this keeps coming up in conversations I have with data center operators or suppliers in the space. That, clearly there's a bottleneck for power, but as Mining Pod listeners and Blockspace readers will know, AI data center operators and Bitcoin miners are getting increasingly creative with their power generation and sourcing power, and they're doing things like buying jet turbines and things like that. But as this tweet says here, all of these guys are increasingly moving towards nat gas turbines to fill in the gap for their power when they can't get enough from the grid. It seems like CleanSpark really found themselves a nice site here. And this also comes off of an announcement that they are tapping a company called Submer, which develops liquid cooling infrastructure for GPU fleets to develop their data centers across the US. Gentlemen, second thoughts on this?
Yeah, I'll throw up the share price here for CleanSpark, which yesterday was kind of a tough day for markets overall, but I think the market is liking overall the trend from September onwards. You can see a clear difference in the share price ever since the announced pivot into AI HPC. They're certainly pursuing that since Zach left the CEO helm and Matt took over. And they brought on a few different key people to start running some of the AI HPC. And then this announcement sort of fit into that fold. I think a few things are notable out of this. JP Morgan, in a report yesterday, praised the management team for not just saying, but doing. There's been a lot of talking, obviously, in a lot of these mining circles about pivoting. And then sometimes it takes a little bit to get a deal done. They've moved pretty fast, which is my second point, it's pretty notable to me how fast they moved on this. I'm wondering, was it like a needle in the haystack, or were they looking at this for a little bit longer? Maybe Ethan can opine on this. From my understanding of these markets, if you are not actively looking into them or you don't have really good connections, it's pretty hard to pull off something like this. From the details we have around the deal, which are a little scarce, there are a lot of benefits here, right? It's next to a major metro area in Houston, also on a natural gas pipeline. And those are the two things that you really want to look at for these sort of deals. And it seems like it's almost 300 megawatts. So it's a pretty good sized deal compared to the ones that we've seen so far. I think when we've looked at some of the other deals, you think of the 1 gig size deals kind of rolling around in our brains like Stargate. That's not your typical deal. Your typical deal is, under 500 megawatts. And we've seen it with TeraWulf and Cypher and others. So, they're kind of hitting a good batting average there. Ethan, I'll throw it to you though. I'm just curious, what do you think about them being able to pull off a deal like this, seemingly within the constraints of Zach leaving till now?
Based on my experience working with some of these management teams and strategy teams at the pubco level, they're always looking for new growth opportunities. And at any point in time, the executives are thinking about M&A, they're talking to their competitors, seeing if they can merge, they're looking at new power assets like these. And so they always have their teams out hunting for new growth opportunities. Of course, as you identified, these sites are slightly different. This type of profile requires better interconnect, closer to city hub, higher uptime power. And so it's not exactly the same profile you'd be looking for from a mining site perspective. But I think these types of sites have been in all of these companies' pipelines for a considerable amount of time. So although I don't have behind the scenes view on CleanSpark specifically on this, I would suspect that CleanSpark was actively looking at these sites and has a whole Rolodex of potential sites that they think are appropriate for HPC as well as Bitcoin mining. So I guess your question there, can they pull it off? I think it's probably a long time in process, but really there's this almost self-fulfilling prophecy here where you announce an HPC strategy, you use that to raise money off a high share price, you then hire very smart people and you figure out how to actually execute on it. A lot of people could have said the same thing with Applied Digital or others back in the day, getting a bit ahead of their skis. Well, if the market rewards you for it with enough money and enough smart people on the team, you'll be able to solve it.
Speaking to, the runway for this site or the rollout, we're looking at H2 2027 for this to be online, according to CleanSpark's forward guidance. So definitely some time in the making. But the first big move they've made into AI, I would say, so very notable headline for the company. We will go ahead and move on to TeraWulf, and huge deal for them. I could be wrong about this, but it seems to me this is the longest duration contract we've seen from one of these deals. TeraWulf has signed a $9.5 billion extension to its FluidStack deal for 168 megawatts in a deal that is contracted for 25 years. Seems like to me this is the longest contract we've had, but I could be wrong about that.
It's the longest I've seen.
Yeah, I think so. And Paul Prager teased, and the press release also mentioned that there is another 168 megawatt option at an undisclosed location that TeraWulf has the first right to be tapped for under this FluidStack deal. So, TeraWulf continues to expand this deal with FluidStack. The original deal and this one will continue to be backstopped by Google. We've also seen FluidStack with Google's backing get involved with Cypher. Just another big win for TeraWulf, and we've seen TeraWulf obviously chase some aggressive financing recently. They just they're raising right now for a $3 billion secured note for these sites, which is also, to my knowledge, the largest debt raise that we've seen of any Bitcoin miner to date. So it just seems like every week the scale and the stakes just continue to get ratcheted up.
Yeah, maybe we can throw that one back up on the screen just to take a peek at it. But I think the thing that was interesting to me and some others in the space was Paul Prager, the CEO of TeraWulf, tweeting afterwards, after the announcement came out, that there's going to be another 168 megawatt partnership at another site that's yet unnamed. Might follow along similar guidelines, just having this JV structure, which is interesting. Perhaps not. We'll find out. It was included in the press release as well, so he didn't really front run anything or kind of wildly offhand tweet something about this, but that was kind of brought to everyone's attention when he tweeted about it. I think two things about this. One, the first is that a company like TeraWulf and all these other miners we're talking about are being viewed as like AI data factories at this point, right? Like this PowerShell model, I think, is increasingly popular. And I think we're going to continue to see that to kind of set the standard for things going forward. Iron is maybe the only case where that's a little different, right? Where they're actually going to go out and buy the GPUs and try to become NeoCloud. But the PowerShell model, from my conversations with executives, it's better for these miners because it offsets your risk by a lot. You can have the tenant come in and build things out like they're doing with CoreWeave and Core Scientific. There's still a partnership there on the commercial terms, even though the acquisition didn't go through. Or you can do some sort of financing option like Galaxy is doing with CoreWeave as well, where Galaxy went and found project financing using the terms from the commercial agreement with CoreWeave to get more favorable economics there. And for Cypher, for TeraWulf, these others, because you are just focusing on the land, the power, and the infrastructure, but not procuring the GPUs, your economics look a little bit better. So that's really what was notable to me in this announcement. The second thing is they immediately go out and do one of these big financial raises, I think with a convertible note that they're going to upsize. So every single one of these deals typically follows with some sort of convertible note or some sort of raise, which seems to be better. I mean, I would love to get a finance expert on the show to talk more about these convertible notes and like what's the better way to use financial engineering to raise money for these sort of deals. Galaxy's been kind of the other one, right? Where they've been doing like these preferred share rounds, basically going out and finding private placement to sell shares in the market. And that's been really good for them in terms of securing low cost capital. The market hasn't loved it as much. Like the share price has been trending a little bit down because of that. But I think like on a long-term basis, it actually kind of makes sense for them to do it. So a few different ways to skin the cat. I'm interested to get more information on like what's the best way of doing this depending on your company's profile. Ethan, any thoughts?
I think your comment on the PowerShell is an interesting subject to double tap into. If you have a client like FluidStack or backed by Google, they're going to hold you to a very high standard. They're going to demand excellence, right? There are certain things on uptime and just general service in their contracts that are 100% required. And if you don't meet that, they're not going to be very kind to you. And so it's going to be imperative that TeraWulf and Cypher and these others are really pushing forward into the HPC AI space in a way that's at par, or if not better than some of the existing players in that space. Whereas if you're running your own GPUs, you can in a way kind of let yourself down, where you can justify, look, we had some downtime, say 2% energy downtime, and that led to a 10% decrease in revenue. And you can chalk it up to growing pains. And, we're still kind of building the business. But really when you have this FluidStack kind of client, you're going to have to professionalize very fast. So it's a kind of a dual-edged sword there, but I'm looking forward to seeing how these guys shape up.
That's an interesting way to frame it, Ethan, because it makes me think of Iron in terms of operating their own NeoCloud clusters currently. There's an argument to be made that they're taking baby steps with that might actually pay off in the future if they can land a tenant at Sweetwater or one of these hyperscaler sites. But that's kind of just a far off thought. We'll go ahead and move on to the Cry Corner. I would say, at least for me, a heavily anticipated Cry Corner this week, because we have not had, the drama with a lot of the dev stuff in Bitcoin come to a head, and now we have. If you have not been tapped into Bitcoin Twitter in the past week, good for you, but we are going to tap you in now, and I apologize for that. So if you were around last weekend, you might have noticed that an anonymous developer published a pull request for a soft fork that looks eerily similar to a lot of suggestions that longtime Bitcoin developer and Ocean CEO Luke Dasher has been pushing for a long time, and that is putting filters for Bitcoin transactions on the consensus level of Bitcoin. I'm going to keep this high level as possible. Trying to explain this to people who have not been paying attention to this, it's like trying to explain Revelation or something like that. I mean, it's just, there's so much going on. TLDR, starting in 2023, people started putting new types of NFTs on Bitcoin. A lot of people didn't like that. People like Luke Dash Jr. said we should try to filter them out of the Bitcoin blockchain. He created custom software to do that. And now he's trying to take that same mechanism and make it enforceable on chain through Bitcoin's consensus mechanisms. I say he is. I shouldn't say that because an anonymous developer published this pull request, but Luke Dash Jr. is heartily endorsing it. So what you need to know about this if you're a Bitcoin holder is this is a soft fork that probably will not get any momentum behind it. The proponents might try to push it through. It might result in a chain split, maybe not, because there probably won't be sufficient adoption. But I expect this to fizzle out, especially considering none of the mining pools that you would want to cooperate with if you were pushing a soft fork seem at all interested in entertaining this idea. And Ethan, maybe you can speak to that. If you don't want to go on the record talking about it, but it just seems like to me this is not something that they're even paying attention to at all. In fact, you had Chun of F2 Pool come out and say, we're not supporting this. You had, I believe, a Brains developer or business development lead also kind of mocking the proposal. It seems like there's not really any support from the mining community for anything like this.
That's correct. Yeah. So F2 Pool and Chun have taken like the first stand. I didn't see the message from the Brains rep, but I think the rest of the pools have remained silent. Now, there are a couple journalists that are reaching out to all the mining pools, including Luxor right now, to start getting some messaging here. I think Luxor's perspective right now is that we, ideally in all of these things, we want to listen to our mining pool participants as much as possible. So we do want to represent them. And so we are having a number of conversations with them to get their thoughts on here. I think all of those thoughts, generally consensus is that we want to see more applications used on Bitcoin for more purposes, which obviously is self-interested to a degree because that will lead to a scarcer block space and higher demand for it, and then higher transaction fees and mining revenue as a result. So our miners are generally pro-transactions. In terms of the distinction between financial transactions and data, I think people generally believe in the permissionless nature, regardless of whether it's a financial transaction or data. But of course, there's definitely vocal people in both the Bitcoin community and mining community that believe that there is a distinction there, which the Ocean Pool folks are definitely trying to portray. I'm curious to see like how this develops and what Ocean Pool looks like in a few months from now, whether it's successful or not. I think Ocean's Pool, position in the market is definitely going to change.
I have thoughts.
I mean, go ahead and share your thoughts, Will.
I don't know. I do want to know like how much they're making, because like there's that rumor went around about how much Luke Dasher's co-founder and CTO for it makes, and based on like the funding and based on how much like their block rewards are, just like the math starts to not math after a while. So there's that. The other thing I wanted to comment on was like the Rage report, which I think we did a Cry Corner on. The Rage a few weeks ago, maybe it's a few months ago at this point, put out a report stating that Ocean was planning on doing a soft fork. They were planning on creating something like this. And the Rage got a lot of vitriol online from the plebs. A few months later, it does seem indeed like the Ocean team was planning on doing some sort of soft fork by proposing this BIP. Now, it's saying it's an anonymous account, but my understanding is that it was linked back to Ocean eventually. So it's still pretty murky out there, as all things are on Twitter, especially around Bitcoin development. But also, there's only one team really advocating for this at any point. So, Colin.
Yeah, and Lolo Leets and the Rage team got a lot of flack for that because Luke said in the leaked text that it's technically a hard fork. There was a lot of equivocating back and forth about what that meant and how this actually would work. And without getting too into it, what's being proposed is a soft fork, but there's a mechanism in it that would basically allow the Bitcoin network to retroactively scrub stuff, which would result in basically a chain split. Luke, there's some crazy feature in there where it's like, I don't know, Luke or someone would be able to set a date in the past to revert the chain back to get rid of unwanted content. So the whole thing is just absolutely insane, and no one's going to go for it because it completely flies contrary to Bitcoin's censorship resistant and permissionless properties. And also, going back to what Ethan was saying, how to put it a way that's not too offensive. I mean, being a Bitcoin mining pool against some of these transactions would be like, I don't know, being a Catholic who doesn't believe in the concept of, of heaven or something. I mean, or transubstantiation or literally any doctrine. It's like you're going against your own interests here. You're preaching against something that actually helps your users at the end of the day. And most miners are not going to go against their economic interests. And also, I would add to Ethan's point, a lot of Bitcoin developers might not like inscriptions, but they think it's more dangerous to try to censor these transactions than not. So I don't expect this to go anywhere. I expect us to all have a good laugh about this in a little while. Really hope that nothing ends up coming to a head here that's bad for the network, but I think this is just too ridiculous.
Let me throw in
maybe we can
one more thought for you guys. So the last few years, 2021 onwards, in Bitcoin conversation was dominated by a few narratives, right? Like Michael Saylor's emergence and DATS. Bitcoin mining coming to North America was certainly a big one with Chinese mining exodus. And then the emergence of a few different Bitcoin op code proposals, OpCTV, OpCat, etc. During that time period, we had a huge concentration of hash rate in North America. We had way more developers be able to speak English and be able to have that cross-stakeholder communication. And now with mining perhaps exiting the United States, or not necessarily fully exiting, but not as important because of AI HPC and the resurgence of Russia and Chinese Bitcoin mining, I wonder if we're seeing like the early innings of a closing of that window for people to have conversations on what Bitcoin looks like in the next 5 years in the same language at the very least. Prior to this, we had a lot of these developer conversations in Hong Kong. People would fly over there because that's where a lot of the miners were, and a lot of developers were over there as well. I think the last few years has been a rare instance where a lot of people could meet in the same room in North America to have these conversations. Certainly, they wouldn't be all the stakeholders for Bitcoin, but there would be a large footprint of them here in the United States. So I wonder if that window is kind of closing. But that's my final thought. If you guys want to retort to that, feel free. Otherwise, we can close out.
I'm good to close. That's an interesting thought. There's like a coordination window. Yeah. I think that we'll probably still get it, but I also think that this soft fork does raise some eyebrows regarding we should be spending our time on more interesting and serious proposals.
Yeah, I think there's an element here where, like, coming at it from the full angle and full operator, there is like we don't want like any communication on these things with other pools, right? Like, we represent like the Luxor pool participants, and regardless of what F2 pool or Foundry or any of the other pools think, like, we are working independently of what they think. Now, it is nice to know that we can reach any of these executives and pool operators at any point, for the most part, right? So regardless of where Hashrate is geographically split, I think, F2 pool, Ant pool, Foundry, like, there's a certain number that will always be accessible and willing to engage. These are people that have vested interest in the Bitcoin network and want to make sure that, the Bitcoin network continues to thrive and push forward.
I think we can close there. Appreciate you joining, Ethan. Ladies and gentlemen, thank you for listening. We mentioned a report on Russia that we will be dropping. Pay attention to your inbox. Subscribe to the Blockspace newsletter for that coming next Tuesday. We've also got a fun pod with Kevin Deedy coming out next Tuesday for a little bit of a market update. We'll be talking about the CoreWeave deal and some of the AI valuations that we're seeing with some of these growth stocks within Bitcoin mining and the cloud compute universe. But with that, y'all have a good weekend.